The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 27th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with beautiful, empowering beliefs. These are the beliefs brought to us by our fearless leader, Mr. Tom O'Brien. You know, he says what you think about, you bring about, and what you focus on grows, folks. I don't know about you, but that is one of the things that attracted me to Tom when we first met. But let's take a look at that, because you see there are 6 steps to become what it is that you think about this. I'd love you to try this for the next 30 days. In fact, I'd love you to pass this on to other folks out there. I'd like you to use it for life, because it could change your life or somebody else's. Number 1, always write it down. You can't do this in your head, folks. If problems could be solved in your head, they would have already been solved out there. You want to solve a problem? Put it on paper. Use the power of that memo pad. Whether it's on your computer, whether it is on your in your phone out there, write in that phone on your memo pad what you want more than anything else in the world. What is it? Make sure it's a single outcome. You first go ahead and write down all the outcomes you want, and then take a look at it and say, hey, what do you really want? Identify one single outcome. Number 2, don't show it to anyone, but carry it with you so you can look at it several times a day. That's the beauty of the phone. How often do you take a look at your phone? Make sure it's got that one single outcome on it. That's what you got to be looking at, more so than to see what emails or see who's texted you or what call you might have missed out there. Number 3, think about it in a cheerful, relaxed, and positive mode each morning when you wake. Number 4, look at it before you go to bed at night. As you look at it, remember, you must become what you think about. Use your imagination. After all, it is the strongest nation on earth. Number 5, here comes the difficult part. Stop thinking about what you fear. Each time a fearful or negative thought comes into your consciousness, replace it with a mental picture of your positive and worthwhile outcome. And number 6, folks, each day of this 30-day program, do more than you have to do. Always do more. Take control of your mind, knowing that your returns will be in direct proportion to what it is that you give. Yes, folks, our fearless leader said it. He encapsulated it better than anyone else that I know. What you think about, you bring about, and what you focus on grows. And that is the 6-step solution to making it all happen out there. Let's go check out what's happening in the markets out here. Hey, how did that happen? I see green across my board. I hope you caught the 9 o'clock show out there, because we were showing a number of completed patterns as the S&P futures on a 30-minute basis were forming a low. We went through 4 different elements that said the move to the downside this morning was false. Was completed, not false, it was just simply completing patterns out there. And I see we've got somebody inside of the den. I have no idea whether it was the analysis on that I was taking a look at in the charts or what have you, but he went ahead and closed out his short position, and I say congrats. Whatever it was that helped you to decide upon that, congratulations. That doesn't mean that the market can't continue to go south. The sky could be falling out there. We can't control what happens next. We can only control what we do with the information at hand out there. That's what trading and investing, that's what life is really all about out there. Right now, we've got the Dow slightly green. It's up 7 points. The S&P is up 90 cents out here, so no big deal out there. NASDAQ Composite up 2 points. Russell 2000 up 3. Now, remember, it's the Russell 2000 and the NASDAQ that have been the weak links out here. So what we want to do is we just simply want to continue to focus on those as well to see what's going on. Of course, the New York Stock Exchange was one of the first tips. Well, we had a number. I said 4, maybe we had 5 different elements out there in the marketplace early this morning here during that 9:30 to 10 o'clock session. I was just saying, okay, Something to think about, more than something to think about. So New York Stock Exchange, it's up 0.25%. It's actually the Russell 2000 leading the way. New York Stock Exchange is just a nose hair behind, and that's what's going on inside the indexes, inside the currency market out here. We didn't take a look at it. We should look at the Great British Pound. That's got some movement in it. Silver is back 8 cents. No movement really there. 1969 looks like it does want lower price. You've got Goldilocks back $6. It also looks like it wants lower price too. It's trading out at $12.96 now. Inside one of the patterns that we were looking at here, let me go ahead and put it up on the screen. There were several, but the one that we were looking at, if we take a look at the 30-minute chart in the ES Mini, we saw it form a nice high out here. This was back yesterday at 10 o'clock. It was forming that nice price relative strength divergent pattern. That means price was moving higher, and it was doing it on less relative strength. We got the reversal signals out here inside of the ES Mini, just as we did here as we were coming into the 10 o'clock session here. Price was moving lower. It was doing it on less relative strength out there, and now you got the big old bearish engulfing candle that is forming. Of course, there is still it's 10:12, so we've got a total of 18 minutes left in the trading session here. So the bears could jump on board and reverse, but it looks to me like we've gotten all the signals that we need out here for a bounce. Now the real question is going to be, where's that bounce going to take us to on that 30-minute chart? Well, let's go back here. It's a little bit easier for me to draw the retracement level, so let's do that. Let me just do this. It's a little bit easier here. Let's go back to the ES Mini just to get a guide out here as to what's going on. Number one, well, first of all, where could the bounce take us to? Number one, the ultimate bounce, it would seem to me, would be to take us right into the bottom of this rising price channel that is held as resistance. We've seen two tests. Maybe the third time would be a charm out there. What's that price level? I don't know, 1875 or so. That would get us all the way back up to the highs out there. So that's certainly one possibility. Another possibility with regard to the bounce out here, we just simply take from the C to D leg of the C to B equals CD down. You can see right now you've hit the 0.382 level, 1847, so that could be a quick trade for somebody. But most likely what you would see is a move up to the 1855 range, the 0.618 area, 1855 to 1861 or so, on a bit of a bounce out here. That would be a likely outcome. And, of course, the closer you get to the 1861 level, the closer it starts to get to the bottom of that formed rising price channel out here that has held as a resistance level. So we'll see how these things are going to trade. Remember, in that price relative strength divergent pattern, you've got to have the bullish candle that forms, and that does not complete here until 10:30. We've got a total of 16 minutes to go on that trading session. We'll see how the bulls and the bears duke things out here. I said let's go take a look at the currency pairs, because I forgot to do that here early this morning. Other than looking at the euro, Japanese yen, we don't need to really cover that at the moment. Let's go take a look at the Great British Pound. Let's go see what it is doing out here. Great British Pound is, where is it? Right here. Great British Pound here. That broke a rising price channel on the daily chart, didn't it? Just so we look at the S&P futures out here, the 30-minute chart, now we can see is that the Great British Pound, U.S. dollar, it made the 0.618 retracement of a butterfly pattern out here. So that's a normal level. That price projection was 1.6469. What it actually got down to, boy, it missed it, didn't it? 1.6535. Got to love that. And now what we're seeing it's going to try to do on a daily chart is get back inside that larger term channel out here. If it can't do that, just like the ES Mini, that would be that could be setting up an A to B equals CD to the downside. But that's what the daily is saying. Hey, that's what it's trying to do. The weekly probably tells the better picture in that it has rejected the breakout area. So that's a beautiful thing on a weekly chart, because in this case here, we're taking a look at the weekly chart for the Great British Pound, U.S. dollar. It broke through a significant area of resistance. That's the black horizontal line. It's a consolidation pattern. It's a consolidation that had been in place going all the way back to January in 2010. Long-term consolidation out here. It broke through it. And this one, it really is textbook, because it broke through a nice wide-ranging bar, does it on February 14, trades sideways for about 3-4 weeks out here, comes back to test it. Came back, tested it last week. So far, it's rejecting it. A true rejection at the end of this week would give you a bullish engulfing candle, which would mean a close above 1 Where's the open here? Come on. 1.6641. You're at 1.6627 as we speak right now. So a close above that, and that says really be looking for long trades inside the Great British Pound. Don't be looking for short trades out there. So you've got the weekly confirming that the breakout was real. Now what you want to see on that daily chart is for price to get back into the rising price channel out here. That's on the Great British Pound, U.S. dollar. Let's go take a look at the U.S. dollar, Japanese yen out here. We had finally woke up just a tad. We've seen quite a swing here from swing point low to high inside the U.S. dollar currency pair. That blue line, what is that dark blue line on my screen out here? It's a good question. I don't know. Let me actually just I won't waste your time on the show out here. But we've seen a price move this morning as low as 101.71 to a high of 102.42. Considering the last several days have been nothing more than just small-bodied candles out here. The U.S. dollar, Japanese yen, if you can get above the price point of 102.67, that will be then it should move all the way back up to the to where it formed the 0.618 Gartley sell pattern, and that's at around the 103.70, 103.74, 103.75 type range out here, where it formed an A to B equals C. If you can get above that, then you're going to see that currency pair move much higher. But still, what is in place here right now, you have to admit, what's in place right now is still a bearish pattern, which is the Gartley sell pattern, which is in effect, and that's inside the U.S. dollar, Japanese yen. Let's take a look at the euro. Let's go see what the euro has been doing. Let's take a look at what time frame chart do we have out here. Come on, switch over there, tablet. There we go to the daily chart. So in the daily chart here, we know that the euro U.S. dollar, unlike the Great British Pound, it too broke through resistance. It broke through horizontal resistance. That was set up back here from about the October 2013. That's your horizontal resistance, right around the price level of about 138. What is it, about 138 even, Steven, or so, 138.0607, somewhere right around there. That's horizontal resistance. It broke through that. It's come back. It's now back below that level. It's also broken the descending price channel, still above that level, and it broke the trend line. It's trading right below there. At the end of this week here, it really needs to get above, I'd have to say, it needs to get above 1.382 or so, and then the breakout will continue to be real. So in this case here, it's broken through horizontal, a couple different diagonal resistance levels. If the break inside the euro is going to be real, it's also going to get back above that level out here. That's what's going on inside that currency pair. Inside of the metals market out here, if we take a look at gold and silver, gold here trading out at $12.98. It's broken through the 13.11 barrier. 13.11 was a 0.382 retracement level. That says that Goldilocks may want to make a run down for the 12.62 area. That's your 0.618 retracement. If we take a look at high-ho silver out here, silver has, it's silver. Silver may want to make a run all the way back down, believe it or not, to the December 31st lows out here, taking us back into about the 1872 type range. 877-927-6648. Dow's up 11. S&P is up 70 cents. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 21, S&P is up 2, NASDAQ's up 7 points, Russell 2000 up 4. So the sky is not falling, at least not just yet out here. What I've got on my screen, and we're going to take a look at the 2 weakest areas in the market, or the 2 weakest areas over the past really the last several days, last week or so out here. First one being the NASDAQ futures, and I've got the 120-minute chart up on my screen here, the 2-hour chart. And as we take a look at it, we've got the Rhodes Momentum Indicator system out here. We've got one of my favorite patterns, and that's that price relative strength divergent pattern. That's exactly what was being formed as price was pushing lower here this morning into the 10 o'clock time frame. We got down to a low out there of 35 and a quarter. The beginning point to try to identify that divergence really took place here at the push lower. This was at 12 noon. That was on March the 24th out there. That price level was down at 35.75.50. From that point forward to this morning here, as we came into the 10 o'clock session, we saw price move lower, and we saw it do it with less relative strength out there. That is now what you always have to wait for is you've got to wait for some type of bullish signal. Now, in this case here, we don't get that till 12 noon. So that doesn't take place till after Larry's show, Basil's show, when Basil's show is over. And that says here inside the NASDAQ futures, if you were to get the NQ, 120-minute time frame, if you get a close above 35.76.25, you've gotten your confirmation of a reversal signal. Now, you always like to have follow-through on that as a confirmation. That means on the very next candle session, going into that 2 o'clock time frame, what you would need out there is you would need, additional follow-through to the upside, or at least a close above this candle session from 10 o'clock this morning, the high of that being, well, we'll say the open 35.7625. Ideally, you'd like to see it close above where it's at about right now, 35.86 as well, in order to get one of my RMI bullish signals out there, trend change signal out here as well. So you've got a couple of things that are taking place. Now, if you're watching this on Tiger TV, you can see that we also had a price relative strength divergent pattern that had formed out here at about 10 o'clock in the morning, and that was on March 24th. But you see, you always have to wait for the signals. You have to wait for the the sign painters out there, and that's the combination of the bulls and the bears. They show up for work, and all that they do each day, the entire thing that they do, you might think what they're doing is buying and selling stocks. I say that's only one of the things. What their real role is to go ahead and form signs, is to make signs, is to paint signs out there. And that's the key, is to be able to put those signs together with whatever it is the trading patterns are that you trade out there. If you do that, you'll unleash an incredible amount of knowledge that will give you the conviction that you need in order to go ahead and trade your patterns out there. So a lot of time left in the trading session. What we do know is when you take a look at over the last couple of weeks here, we've seen rallies be sold. Truly, rallies have been sold versus the dips being bought. It's been the rally sellers that have been the ones that have been victorious for the last couple of weeks or so out here, at least the last week. Maybe it's probably been about the last 5, 6, 7 trading sessions out here. So the question is, okay, Steve-O, you've got a bit of a reversal here, so where's it bounced to? Well, if we want to know where the bears have been camping out, they certainly were camping out right back here at 10 o'clock or 12 noon on the 120-minute chart here yesterday, so between 10 and 12. That price level out there is 36.52. So if you get up to 36.52, you got to be careful. Not you, but you want to be careful, because that's certainly where they have defended a position before, and you got to suspect that troops have been left behind there to go ahead and continue to defend that position out there. So if you see it close above 35.84, next move up to 36.52 is the likely place where you would expect to see encounter some resistance. You also would be getting right back up to the swing point here that was formed at 10 o'clock yesterday morning out there. So that's where I would expect inside the NDX out here, the NQ. And if it can overtake that, that would be a very strong message in the market with regard to a retracement, probably up into the price range of about 37.04 or so. So that's inside the NASDAQ futures. That's on the 120-minute time frame. Let's go take a look at the Russell 2000, because that, too, has been a weak link out here. Let's go see what it's been forming during this time frame out here. We'll just give the chart here a minute to go ahead and refresh. Well, it, too, has formed a price relative strength divergent pattern. Now, as it was doing that here this morning and pushing the lower, it was forming a hammer candle. So it's already given you the one candle reversal signal out there. And that means that this session right now that takes us into 12 noon, that would be the confirmation. And as long as you get a confirmation with a close higher, then you've got your bullish reversal signal. 1157.40 is a key area for the Russell 2000 to move higher. When we get back, we'll go take a look at where the bears are clearly hanging out inside the Russell. Dow's up 17, S&P is up 2. Stevie Son will be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, Dow's up 22, S&P is up 1, Nasdaq Composite struggling here, just really at break even as we speak right now. So back to the Russell 2000 120-minute chart that we're looking at, the price relative strength divergent pattern. So once it clears the 1157 area, I don't mean just like clear it and I mean close above that level. Then you start to see the shift in trend from the bullish standpoint. Now, what I really am seeing taking place here, more of a counter-trend rally, and what we're trying to identify is where are the areas, the likely areas of resistance. It's nothing more than a battle between the bulls and the bears, right? So what the cool thing about the candle signals out here is that they show us where the bears have been hanging out, the front lines, if you will, of the battle that's going on inside the markets. Well, as we take a look at the Russell 2000, very clear. You got a nice big bearish engulfing bear sash candle that took place here at 12 noon. That was on March the 25th. The high of that level, because that's really your resistance line out there, that's at 1187.90 out there. So right around that area. Of course, several hours later, 10 o'clock on March the 26th, the high out there, that's another bearish engulfing bear sash candle, and that is the price point of 1184.30. So right around that area is where you should expect to see significant resistance inside, so we're talking, 1185, 1187, right around there. So that's utilizing just simply candlestick signals out here. Now let's go take a look at another tool, and we're going to stay with the 120-minute chart out here. And so what I'm going to put up on my screen here is we're going to take the 120-minute chart, and we're going to take a look at the TAS signal box indicators out here, and that's what we're looking at on my screen. And what we're really looking at right now is we're just looking at the horizontal lines out here, the red line, the blue, light blue, and the green. You know what John Logan likes to call the unfair high, unfair low, and the point of control area. Now, the point of control area, what he's referring to, it's really just like what Bud Rolfs has taught us about primary trading ranges. It's the area where you see where price just kinds of nests, if you will, where you've got the largest number of co-located opens and closes for the most part. And that's at 1173. So 1173 really becomes your magnet area out here. There was good support right down here at 1152. So that has acted as a support level. So I'd have to say the 1173 to 1180. 1180 becomes some significant resistance utilizing the 120-minute chart for the TAS signal boxes at this stage. So you got 1180 utilizing that technique out here. Let me do this, make this smaller. There we go. So 1180, and what we're talking about, I'm using the price points of about 1185 or so. So there becomes, so if you were playing a counter trend rally, if you were if you're taking just simply a day trader and you're into the trade, I've just given you, I should say. The market's just giving you, really, it's not me. I'm just reading what the chart signals are telling us, right? If you just played this market as a game of pinball, because we're in a consolidation right now, consolidation heading lower inside the NASDAQ and the Russell 2000, but really kind of a consolidating market out here. And so this is, and if you take a look at where price ended on December 31st, where things closed yesterday, you will see that we are absolutely in a pinball game. So that means you take your momentum systems and you park them, you go rest them, you let them heal up out here, because we're not in a momentum marketplace out here. This is the most important thing one of the most important things, we can talk about a lot of them, one of the most important things that you can do is identify the market that you are in, and then make sure that the trading tools that you use are trading tools that work with inside that style market. So if your only trading tools are momentum-based trading tools, then be in cash, because that's a trade out there. If you can go ahead and you're fast enough to be able to trade consolidation patterns, then you should go ahead and do that. It's really hard inside a newsletter to do that, because you've got to be in essence in front of a screen, reading signals out there, taking a look at retracement levels. Because that's the only way that I know how you could really do it. And so in any event here, from a intraday trading standpoint, inside the Russell, if we can get some legs, it's going to run into some big battles in that 1180-ish range out there, and that is using a 120-minute time frame. The numbers would come a little bit different if you're using a shorter-term time frame, a 30-minute, but the concept is really just the same out here. So that's what's going on inside the Russell. We took a look at the NASDAQ. Let's take a look at the Dow out here. Let's go see, the Dow has been the stronger of the indices as we speak right now. We'll go back and take a look at one chart. So here inside the Dow, no price relative strength divergence or anything hanging out here, but what we do have is in the 120-minute chart for the Dow, you've got a huge line of resistance out. I'm just going to keep moving this line. This is the red horizontal line on my screen out here. So where's resistance inside of the Dow on any kind of a bounce? It's going to be right around the price point of about 16,360 or so out here. You can see at a little dark cloud cover and follow through. This is yesterday at 10 o'clock in the morning. That was running into the resistance that was set off by the bearish engulfing bear sash candle at 2 o'clock in the afternoon. That was on March the 21st out there. So right now you've got the bulls trying to take control, forming a little bullish engulfing candle. If the Dow futures can get above on a 120-minute chart, close above 16,218, that would be a nice indication of a bullish move that you should see the 16,360-ish range come back into play, because that, in essence, right now, that's where the bears are hanging out on the 120-minute chart for the Dow. And back to the ES Mini, I don't recall if we covered that during this hour, so if I did, I apologize for doing it twice. And But otherwise, if I didn't, then at least I can give you some information on that. Most people, if they're trading intraday, they're trading the ES Mini futures out here. So on the ES Mini, you're looking at needs to get above 1847 out here, 1847. Let's call it 1848. A close above that would be nice. Right now, you're forming a bullish engulfing candle, but still a lot of time left. Right, we got till noon in order for this bar to complete out here. But at noon, if you can close above 1850, that would be a nice little bullish move out here. Where's price going to potentially run into resistance? Well, I take you right back here to the 12 noon session. That was on March the 25th out here. That high is 1864.50. 1864.50 is probably all she wrote out there, and that is on the 120-minute time frame for the ES Mini. Let's go take a look at some of these stocks here that are popping and dropping. I've changed things up here. So popping to the upside here, you got Intercept Pharmaceuticals, Signet Jewelers out there, Google, Priceline, Accenture to the downside out here. Let's go take a look at Lululemon. Have not looked at Lululemon for a while. Give me a moment here to switch over to a different tab. Where here is? We'll use this little show up tab so that Stevie can show up here. So LULU is the ticker symbol. LULU, so it is probably running into some resistance here this morning. Give me a moment here. We'll take a look at this. This had formed. This had completed a 1 to 2, A to B equals CD to the downside. Right now it's up with some pretty good volume, meaning it's done 5.7 million shares running into the gap. Now, the last time it tried to take on this gap, it had moved up with about 2.2 million shares. That was from February 27th out here. That high was 53.39. So you're moving up into that area with volume. That could be, if it can complete that, then it probably ought to go close the most recent gap out here. That would take you to what looks like a price level about 57.29. The reason I say that is because you'd form an A to B equals CD to the upside out here. That A to B equals CD pattern, that would take you to about 50. Well, 1-to-1 would take you to 55.43. They're 1-to-1.272. That would take you to 57.86 and go ahead and close your gap. And that could be the extent of any move inside of Lululemon, unless you really see some signs of strength here off of the bottom. But today it looks like it's trying to poise itself to take over and close above 53.39. It's got the volume thus far behind the move. If it can complete that, you're most likely looking at 57.86 inside of Lululemon. Let's see, what else do we have that we haven't looked at here that I can recall in a while? Let's take a look at Concho Resources. CXO is the ticker symbol. That is trading up about 3.5%, about $4. Looks like, now this is a strong stock, huh? Concho Resources. This is very strong looking stock chart out here. Let's close this. This thing has not backed off at all. It's now trying to take on its swing point high. Here's where the resistance is. This little doji candle. A doji candle was up at resistance. That was a doji from March the 4th. Why do I say resistance? Because if you go back to the left-hand side of the chart, you can see it was making a 100% move, getting into that swing point from October 18th. That had volume of 1.7 million shares. You were coming into it with 1.4, 1.2 million shares. Not enough to bust it out. Today, though, you got 247,000 shares, an hour and 15 minutes of trading. Still going to be light on volume. That still kind of mathematically moves out to about 1.2 million shares out here. But, boy, a nice, strong stock. If it can get above and close above 123.38, if it can do it with more than 1.2 million shares, that's setting up a nice A to B equals CD to the upside. There is nothing bearish that I can see inside of Concho Resources. In fact, if any, let's put this on a weekly chart. It looks like also a consolidation pattern here that it is. Yeah, it's a consolidation pattern for sure that it is trying to break out. But on the weekly chart, let's see what it's got on the weekly chart. The weekly chart has volume here of 7.8 million shares. You're not going to have it on the weekly chart, that's for sure. You've only done 2.6 million through yesterday out here. But not a bad-looking stock chart out here. It's a momentum play. If the market were really to get bullish, this is probably one that you'd want to take a look at. But that is not the case as we speak here right now. Let's see, what else do we have moving? Let's take a look at some things moving to the downside out here. Things like Accenture ACN is the ticker symbol. That's trading off about 6%, down $5. Let's go see what kind of volume is behind its move to the downside here this morning. Accenture down with volume, that's for sure. Let's go see what this is going to try to trade into. Let's clean this stock chart up here. So Accenture here is coming into a sign of strength. Had a nice sign of strength, wide price spread, accelerated volume. That was December the 19th. So far, that level has held out here, that being the price point of 77.49. The last time that was down there and tested it, it was on light volume, 3 million shares versus 10 million shares. Unfortunately, today it's down with volume. Already 6 million shares coming into that point. Now, maybe that's going to be a line of support out here. That would be impressive if it, in fact, holds as a line of support. However, if it does not, it says that it ought to come back to the original sign of strength, that December 18th area, maybe around 74.15. That is on Accenture. If we pull this back further, it really opens up the door for this big move that took place here on July 1st. Right around $72 or so. But thus far as we speak right now, it is holding. It's holding its own, but it's got a lot of volume. It's got a lot of selling pressure, and that is ACN is the ticker symbol. I want to take a look. I think I mentioned Tesla here. I just wanted to see, is Tesla, I think I've got that in this little tab here, this little core holdings. As Tesla gapped down and created an island. TSLA is the ticker symbol, not to be confused with TSA. No, it did not. Maybe I'd covered that a couple days ago and just simply forgot. So no island reversal inside of Tesla. That's actually pretty good out there because you do not have volume off of the top here inside of Tesla. So now the question is, if unless the market is totally rolling over here, and we'll go take a look at the indexes and so forth. At this stage here, Tesla ought to make just a natural retracement. That retracement, right now it's on the 0.382 retracement. That retracement ought to take it down to maybe about $172 out here. It's trading at 210 as we speak. But on the pullback here, not too bad. And 172.10 is your 0.618. But really what you've got, a sign of strength that took place inside Tesla, just slightly below that. January 14th is the time frame that we're looking at. And if you look at the high there, you had 27 million shares, made it up to 162 even, Steven. The low there was 136.73. So right around that area would be more of the ideal potential trade setup. Now, if you're long Tesla, that's likely where Tesla is headed to. So you'd really have to determine whether or not you want to take that kind of pain as we speak here right now. Now, what is Tesla done that is positive? Let me see. It's just really come back to its most recent sign of strength, and that took place here as a gap up from February the 19th out here. So it's just come back in that area. That had volume of around 16, 17 million shares. You're pulling back today. You've done 4 million shares, and that could be a bit too much volume. We've only been trading for an hour and 20 minutes, so that could be just a bit much inside of Tesla, setting up that move a bit lower out there. Let's stay in here. Let's take a look at some of these. Let's take a look at another core chart out here. Let's take a look at Intel. Intel trading out at 25.69 right now. Intel has been trying to take on its resistance area, and that's set up right here at this big gap down on January 17th, 112 million shares, and the price point is 25.86. Has not been able to make it up there, but it's still a pretty impressive looking stock out here as we speak right now, just as many of the equities with inside the semiconductor index inside of the stocks. When we get back from this break here, let's go take a look at some of the indexes and see what they look like. Take a look at some of the caution signs in the marketplace. Right now, we've got the Dow is up 22, S&P is up 1, Russell 2000 up 2. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Barefoot water skiing, that's what we could do out there because we are flat in the market as we speak right now. The Dow is up 57 cents. The S&P is down $1. NASDAQ Composite off 9. Russell 2000 down 27 cents out here. New York Stock Exchange is still green. If we so let's take a look at what is it that we know right now. Number one, we've got the VIX index. It's trading right on the 50-day exponential moving average. So in the arm wrestle between the bulls and the bears to truly try to take possession of the markets out here, we're seeing a draw as we speak right now. The 50-day moving average right around, let's see, what is the exact number here? It's 1485. We traded 1491. We have traded on or near the 50-day exponential moving average ever really since March the 18th. So you've got 2, 4, 6, 7. 7 of the 8 trading sessions have closed on or near the 50-day exponential moving average. You get real big, the price moves well above that level, you get real big price erosion inside a market. You move below it, you've got a lot of liquidity to push the markets higher. So that's a draw out here. If we go take a look at the euro Japanese yen as we speak right now, that too is a draw. The bears have not been able to take control. They've been able to try to push the euro Japanese yen down below the support level, but that level has held. That level being 1.4042. You see price move below that area, and that spells trouble. That says 139 is next on the agenda as far as its price is concerned. But right now, it's just simply holding its own as we speak. If we go take a look at the if we take a look at the daily charts out here, what we know about the NASDAQ futures, what we know about the weak link, it's now made the normal 0.618 retracement. That means going from the swing point low, which is February 5th, up to the swing point high on March the 7th. That level would have taken us to 35.37.49. It actually got down to 35.35.25 out there. You got to love it. 2 points or so. So it's made a normal move down to the 0.618 retracement level. And at this stage, and we know because we covered the 120-minute charts, we've got price relative strength divergence in the two weakest indexes out here. That being the NASDAQ, that being the Russell 2000. So that bodes well for the bulls being able to push the markets higher out here. And you've got the 0.618 retracement on the daily chart. On the daily chart for the S&P futures here, they've not given it up either. By giving it up, I mean they're still traveling in that consolidation box out here. That consolidation box says, hey, if I can bust out of here, I want to move up to 1957. That's 100 points higher inside of the S&P. If it cannot stay outside of the consolidation, that's negative. That says it travels all the way down to the 1732 range out here. But right now, as we speak right now, it has not given us the sky is falling message inside of the marketplace. Look, what I do expect is what we have seen is we've seen rallies get sold. It's a matter of trying to identify where is it that next selling spot is at. That's why we use the 120-minute charts out there, the 2-hour charts, to try to identify those places. But right now, in the daily chart inside the daily S&P, no problem. If we take a look at the Russell 2000, right here's a weak link out here, but take a look at the trend line that it has held. If you come back to the trading sessions of December of 2012, right, pretty significant bottom that formed out there. Remember, that was the sky was falling time period, right? We had the budget battle. We had the sequester stuff that was going on. So I'd say it's pretty important low. If we just simply use the trend line out there, or the channel line really is what I've drawn in here, a little superficial channel line. That's just a red diagonal line going up across my screen. Guess what the Russell 2000 did this morning? This is the Russell 2000 futures as it was pushing down right into the support of that rising trend line, of that rising price channel out there. So we've seen a lot of selling pressure out here. Let's see what the bulls can do, see if they can give the bears another opportunity to sell. Stay tuned, folks. Thanks so much for joining me. Our man Basil Chapman is up next. It is Terrific Thursday. That means we got Larry Pesavento, Daryl Martin, David White, Andy Heck, and the Tom O'Brien Show. Thanks again. Look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.